Thanks for checking out another video from NetPicks today, and we're going to talk about the RSI, the Relative Strength Index. And I saw a survey a few years ago, and it talked about what were the most popular trading indicators, and they had done a survey. And it turns out the RSI was the most popular one being used. Interesting, because quite simply, it just compares the strength of up days to the strength of down days. And from that calculation, we can determine the momentum in the market. And it's a bounded indicator, which means it's going to oscillate between the numbers of 0 and 100. And the settings that a lot of traders look for, there's two. There's 80 and 20, where 80 is an overbought level, 20 is an oversold level, and 70-30, where 70 would be overbought, 30 is oversold. And I'll tell you, if you just blindly take trades at these levels, or you're treating them as just trading signals, you're going to lose money. Over time, you're just going to lose. And yeah, these levels can show you the strength of the market, but you definitely need other techniques to trade off of them. How do we trade with it? The oversold, overbought settings, that's a pretty common approach to the RSI. The issue is that markets can stay in those conditions for a long time. This is Bitcoin daily chart. So if you're using overbought to exit a long trade, maybe you're expecting reversal or you're looking to short, you'd be stepping off of some serious gains in Bitcoin. That's 252% rise in price. Now the RSI, it's no different than most indicators. You trade them blindly, you're going to miss out on some good moves. You're going to rack up some losses. So how could we use it if just oversold and overbought is not that great? We want to combine RSI divergence and oversold and overbought. Right? So quite simply, we're just looking for the indicator to diverge from price. So if the market's in an uptrend, we're going to compare the highs in price to the highs in the RSI. If we're in a downtrend, we're going to compare the lows of both. So using this approach, we need the RSI to be either oversold or overbought, and then show us divergence. Let's look at an example here. This is American Airlines 1-hour chart. Overall uptrend, you can see that. And you can also see points on the chart where the RSI makes lower highs. Well, it's in the overbought zone, which is plus 70 in these examples. Price is making higher highs, but the lower high in the RSI, coupled with being overbought, gives us a clue that we could be seeing a reversal. We're talking about bearish divergence here. And I think this is a perfect example of divergence using the RSI. Now, there are times you're going to get divergence, but price is not always going to act the way the textbooks say it's going to. So it's really important to have supporting variables to your trading. And that's where knowing structure and price action will certainly help you. And what also will help you is having a trade entry trigger, right? Because we don't want to just jump into a trade without some type of confirmation, especially short when we're in an uptrend. How can we do that? You can set an order to sell below the candles that makes the higher high, for this example, and where the RSI made a lower high, right? So on the left, one trade does not trigger because it doesn't break the low of the candle. The other one gaps down, that takes out the low. So you would have to enter on a breakout from the range, use a failure test of high, or any other methods that are out there to enter trades. My technique would be to drop down to a lower time frame chart. And this is going to be a 15-minute chart. So if we go back to the original chart, this is the first setup where we had no trigger. But if you're trading on the 15-minute chart, you actually had a large move that you could have entered to take advantage of that gap fill. What about support and resistance? Traders can also use it to find support and resistance levels that you may not see on the actual trading chart. You don't draw your lines any different. You do the same as you would on a price chart. When you use this chart, refer to the arrows on the RSI, and I want you just to look up in price. The one that I find the most interesting is the highest peak, and where the RSI showed potential resistance at that point. I prefer using the RSI technique with channels, as we can see on the right-hand side. And this technique may have some merit. It's a popular way of using it. My preference, use price. Just look at the price, look at the swings, instead of the RSI for that. The 2-period RSI, it's a pretty interesting approach, and it's actually from Larry Connors. And just by the setting of 2, you know it's going to be a more volatile momentum indicator. The common setting is 14, right? So with this approach, though, we want a more volatile RSI. We're also going to change oversold and overbought to 95 and 5. That's our levels. Connors does suggest using a moving average for trend indication. He recommended a 200-period moving average, but you can just look at price action. That's my favorite way of doing it. This is, again, Bitcoin. Cryptocurrency is clearly in a short-term downtrend. It's the hourly chart. It's making lower highs, lower lows. So once price hits plus 95, we're looking to take a short because the market is overbought in the short term, of course, and this is a bearish signal. You need an entry trigger, and this example just uses a break of the trend line. We can also use a 5-period EMA. This is a 5-period exponential moving average. So you take the trade when a candle closes red below the EMA. I want it red. That way I know we're heading back down. You can also use candlestick patterns. 3-bar reversal pattern is not a bad one to try. This is a daily chart of AMC. Price movement shows us we're in a trading range. We'll be looking for bullish signals at the bottom of the range and bearish signals at the top. Trading the range here played out pretty well. And depending on how you exit your trades, you could have actually been in this long before that strong trend runs up in price there. Depends on your entry and exit. For example, on that second bullish entry, price hits resistance, but it didn't fall back into that small trading range. More or less bounced off of resistance, turning it into support. So this is going to highlight the importance of not only having stops in place, but also how you're going to manage and take profits in your trades. Because without a trading plan, you're just flying blind. Let's wrap it up. You know, it's versatile. It's pretty simple to use. Apparently, it looks pretty robust, right? And for some of you, it might be intriguing to test it even further. We could optimize the setting, the look back period, so our indicator will line up the highs and lows of the RSI with swings in the market. This is probably something you'd want to do on the higher time frame charts, daily and weekly, because intraday has a lot more swings that you want to contend with. If you have any questions about the RSI or how to use it, pop them below. I didn't go into detail of a whole bunch of different strategies because, quite frankly, it's a pretty simple indicator. But if you have any questions, pop them below. Like the video, hit like, hit subscribe, and we'll talk to you soon.